Hey there, investors. Welcome to another ETF Spotlight review. Today we're taking a look at a WDIV, which is the State Street SPDR S&P Global Dividend Fund. So this one might be appropriate for investors seeking moderate long-term capital growth with relatively high yield over the long term. And also you'll need to have a very high risk return profile, and if you need access to your capital, obviously because it's an ETF, you can buy and sell and get your money out of the market quite quickly. So that might be of interest to you as well. But let's have a look at this one. Might be a good product to give some income diversification in your portfolio. Hey there, investor holics, it's Scott. KrackTheSky Value Investing will be giving you up-to-date investing news and content. You can navigate the markets wherever you are. My mission is to give you the knowledge and confidence to take control of your financial life, expand your investment horizon, and crack your financial sky. Don't be afraid to give us a thumbs up and a subscribe. Okay, the SPDR S&P Global Dividend Fund 6 to closely track before fees and expenses the returns of the S&P Global Dividend Aristocrats Index in Australian dollars. So the S&P Global Dividend Aristocrats is designed to measure the performance of the high-yielding companies within the S&P Global Broad Market Index that have followed the policy of increasing or stable dividends for at least 10 consecutive years, I should say. So why would we looking at this one? If you want to capture some income, so earn potentially, this one pays out on a semi-annual basis, and obviously have exposure to quite a few high-yielding companies that are pulled out from the index. Global diversification, individual stocks capped at 3% and a maximum of 25% in each GICS sector at the rebalancing date. Dividend growth, investing in companies with increased dividends or those who have maintained stable dividends for at least 10 consecutive years. So you're looking at effectively slow growers but high payers, if that makes sense. Okay, we had a net asset value of $17.49 and trading above that at $17.56. Market cap $305 million. Management cost of 0.5%, and you get a dividend semi-annually. Dividend yields around 4.5%. So WDIV might be of interest for investors that are looking to build diversified income streams that are less correlated. So if you've got most of your income coming from Australian assets, whether that's property here in Australia, or you might have some shares in other ETFs or other companies listed on a stock exchange, and then this one gives you an opportunity to diversify away from just income from one jurisdiction. As we touched on before, the fund invests in a diversified portfolio of approximately 100 global companies, which increase or keep stable dividends. As we sort of said before, Dividend Aristocrats, which is quite a big thing in America. So you've got companies that have kept their dividend or increased it for 30 or 40, 50 years, some of these companies. So they just slowly and gradually keep it increasing it. So if you're buying and holding for long term, you'll definitely see the increase in your dividend yield over those times. Okay, as we kind of mentioned before, you're looking at high payers and slow growers. So if you can look down here, since inception, we're looking at a total fund return of 6.72%. So your capital growth is just over 1.5% since 2013 per annum, but you're looking at a dividend yield of 5.14%. So that's the majority of your capital appreciation comes in dividends. So you know, just over 6.7%. I mean, like as I said in the introduction, obviously it's a slow capital appreciation over time. So most of the money's coming out in dividends. So you're not looking at big capital growth here. So you're not going to turn, you know, $10,000 into $1 million in 20 years or anything like that. This is a much slower product. It's designed for income. So keep that in mind. I think it's, you know, if you're looking for a way or something to diversify, you know, your income streams away from Australia, you know, sort of a little bit of insurance, I suppose you could think of it like that, then this might not be a bad product. But go dig into the companies, and have a look at the top 10 companies and sort of see what you come up with. But for me, I think I like to see a little bit more capital growth. I think the distribution return is pretty good. 5% for an international ETF is pretty good. But I'd still like to see something with a little bit more aggressive on the capital growth or capital return side. Anyway, I mean, yeah, another option to look at building out your ETF portfolio. You know, if you've got an income portfolio and you're looking for international diversification, it might be something to look at. But as always, you want to be looking at the other products in the market as well. So always do your research. Ciao, ciao. Hey there, are you interested in learning more about personal finance and investing in the markets? If you are, smash the like and subscribe buttons down the bottom of the screen there. Crack the Sky. Value Investing will be giving you up-to-date investing news and content so you can navigate the markets wherever you are. Expand your financial horizon and crack your financial sky. Hey guys, I hope you enjoyed the video. Please give me a like and subscribe. Greatly appreciated. Thank you.